What if I told you that every single time you pull up to a gas pump, someone is quietly picking your pocket? And it's not just the oil companies. In 2026, the average American household is spending over $4,200 a year on fuel alone. That's not a bill, that's a wealth transfer. And today, I'm going to show you exactly where that money is really going and how to stop the bleeding. Let's get brutally honest right out of the gate. You work hard, you budget, you try to do everything right. But somehow, at the end of every month, there's less money left than you planned. Sound familiar? Here's what nobody is telling you. It's not always your fault. There is a system designed to extract your wealth in ways so small, so routine that you never even notice. And high gas prices, they are one of the most perfectly engineered wealth extraction tools ever created. Not just because fuel costs money, everything costs money, but because of what high fuel prices do to everything else in your financial life. It's a cascade, a silent avalanche. And most people are standing right at the bottom of it looking up, wondering why they can't get ahead. According to the U.S. Energy Information Administration, as of Q1 2026, average retail gasoline prices in the United States are hovering at $4.18 per gallon nationally, with states like California pushing $5.40 and above. The Federal Reserve's latest consumer expenditure data confirms that transportation costs now represent the second largest household expense category, just behind housing. Second largest. And yet, when people sit down to budget, they track their Netflix subscriptions and their coffee runs, not the compound financial destruction happening every single time they fill that tank. That stops today. In this video, I'm breaking down the Wise Money 360 perspective on fuel costs. Why it's not just a pump problem, it's a wealth architecture problem. And I've got 3 powerful, actionable strategies you can deploy right now to reclaim that money and redirect it toward assets that actually build your future. Stay with me. This one is going to change how you see every single dollar you spend on fuel for the rest of your life.
Here's the first thing you need to understand, and this is where the Wise Money 360 lens changes everything. When gas prices go up, you don't just pay more at the pump, you pay more for everything. Think about it. Every product on every shelf in every store in America was delivered by a truck. Every piece of food at your grocery store traveled on a vehicle that burns fuel. Every Amazon package, every piece of furniture, every prescription medication, all of it. When diesel and gasoline prices spike, transportation costs for businesses spike. And where do businesses send those extra costs? Straight to you, the consumer, wrapped inside the price tag. The Bureau of Labor Statistics reported in early 2026 that core goods inflation, the stuff you actually buy, remains stubbornly elevated, with transportation-driven supply chain cost cited as a primary contributing factor. So here's the brutal math. You're not just losing $4.18 per gallon at the pump, you're paying an invisible surcharge on nearly every purchase you make. Economists call this the fuel price pass-through effect. I call it the silent double tax.
You get hit at the pump, and then you get hit again at the register, and you never see the second hit coming. This is not an accident. This is the architecture of a system that extracts wealth from people who aren't paying attention. Wise money people, pay attention. Actionable tip number 1, and write this down. Start tracking your total fuel impact spending, not just your pump spending. That means reviewing your grocery receipts, your delivery fees, your utility bills, because energy costs filter into all of them. Use a budgeting app like YNAB, or even a simple spreadsheet. When you see the full number, you will be motivated to act. Most people never see the full number. You're going to be different. All right, pattern interrupt. Stop thinking about gas as an expense. Start thinking about it as a decision. Because in Wise Money philosophy, every dollar you spend is a dollar that is not being deployed as a working asset. Let me give you a number that will physically hurt. If the average American household spends $4,200 a year on fuel, and that's the 2026 EIA figure, that's $350 a month.
Now let me show you what $350 a month does when it's working for you instead of being burned in an engine. If you had invested $350 per month into Bitcoin starting just 3 years ago in 2023, based on Bitcoin's documented price trajectory from roughly $16,000 in January 2023 to its 2026 levels above $85,000, you would be looking at a position worth significantly more than your total contributions. I'm not giving you a projection, I'm giving you historical data. Now, does that mean Bitcoin is a sure thing going forward? Absolutely not, and we'll hit the risk section in a moment. But the principle here is iron. Dead money, money burned in fuel, has a 0% return. Capital deployed into appreciating, cash flow generating, or wealth building assets has the potential for exponential return. That gap between zero and potential is where wealth is built or destroyed. Actionable tip number 2, implement what I call the fuel offset strategy. For every dollar you spend on fuel in a given month, commit to deploying an equal dollar into a working asset. It doesn't have to be Bitcoin.
Save the following. It could be a high-yield money market account, an index ETF, or a micro-investment platform. The point is to psychologically and financially counterbalance the drain with a build. You cannot out-earn a leaking bucket, but you can start plugging holes while simultaneously filling the bucket from another source. This is the 360 perspective in action, seeing both sides of the equation simultaneously. Okay, fraud alert. I need you to lean in for this section because this is where people are straight up losing money to outright theft, not just inflation. In 2026, the Federal Trade Commission has flagged a significant increase in fuel-related consumer scams that are specifically targeting people who are already financially stressed by high gas prices. Here are the ones you absolutely need to know about right now. Scam number 1. Fake gas rebate apps. There are dozens of counterfeit versions of legitimate fuel rewards apps. Lookalike apps designed to steal your credit card credentials and personal data. The FTC documented a 34% increase in fake financial app fraud in 2025, and fuel reward platforms are among the top targeted categories.
Before you download any app that promises fuel savings or cash back, verify it directly through the App Store's developer credentials and cross-reference it with the official company website. Do not trust a link in a social media ad, ever. Scam number 2, fuel investment schemes. Here is where it gets dark. With oil price volatility making headlines, scammers are promoting so-called fuel commodity investment opportunities, promising massive returns from oil futures trading. These are being pushed through social media, WhatsApp groups, and even fake YouTube channels. Let me be crystal clear. If someone online is promising you outsized returns from energy commodity trading with zero risk or minimal investment, that is a fraud. Report it to the FTC at reportfraud.ftc.gov immediately. Scam number 3, skimming devices at the pump. This isn't new, but it's surging. The Secret Service reported that gas pump card skimmer fraud cost American consumers over $1 billion in losses in 2025. The thieves are embedding Bluetooth-enabled skimmers inside the pump panel that capture your card data in real time. The defense? Always pay inside, or use tap to pay on your phone at pumps equipped with NFC. Never use a debit card at a gas pump, ever. A compromised debit card gives thieves direct access to your bank account. A compromised credit card gives you fraud protection. Know the difference. Actionable tip number 3, adopt a zero trust policy at the pump. Inspect the panel seal on every pump before you insert your card. If the tamper-evident seal is broken or looks irregular, go to a different pump or pay inside. Enable real-time transaction alerts on all your cards, and check your statements weekly, not monthly. The faster you catch fraud, the faster you can reverse it. Your wealth defense is part of your wealth strategy. You cannot build what you cannot protect.
So we've identified the problem. We've seen the hidden inflation tax, the opportunity cost trap, and the fraud landscape. Now let's talk about the wise money structural moves, the ones that actually reduce your fuel exposure at the system level, not just at the margin. This is where most financial channels stop. They tell you to drive less or carpool. That's not a strategy. That's a suggestion. Wise money people make structural decisions.
Move number 1. Negotiate a remote or hybrid work arrangement if you haven't already. According to Stanford economist Nicholas Bloom's 2026 work-from-home research data, employees who work remotely even 2 days per week save an average of $1,400 annually in direct commuting costs. That's not pocket change. That's a Bitcoin DCA contribution. That's an emergency fund. That's leverage. Move number 2. Audit your vehicle cost of ownership. Many people driving mid-size SUVs in 2026 are spending between $400 and $700 per month in combined fuel, insurance, and maintenance. The wise money question isn't just, can I afford this car? The wise money question is, what is this car costing me in wealth-building potential? Run the numbers. A vehicle is almost always a depreciating liability, not an asset. Know what yours is actually costing you in total, and ask yourself whether a more fuel-efficient alternative would free up capital you could put to work. Move number 3. Stack fuel rewards intelligently. Use a credit card with legitimate fuel cash back. Cards like the Costco Anywhere Visa or the PenFed Platinum Rewards card offer up to 5 cents per gallon equivalent in rewards.
Stack that with verified fuel rewards apps from major retailers. This won't make you rich, but it will recapture $200 to $400 annually that you are currently leaving on the table. And that $200 to $400 goes straight into your working capital column. Recapture, redirect, rebuild. That is the Wise Money 360 methodology in 3 words. If this video shifted how you see your money, hit subscribe right now, because Future Freedom 360 drops wise money truth every week that your bank definitely doesn't want you hearing. Drop a comment below and tell me, how much did you spend on fuel last month? And what would you do with that money if it was working for you instead? Next video, why your savings account is quietly making you poorer. Do not miss it.